Good afternoon and welcome to the Catalyst for the Trades podcast. I'm your host, Jennifer Bagley, and I'm very excited about our guest today. We have Devin with Squire, who happens to be our company's full accounting team, fractional CFO, strategy team, helps us with everything you could imagine. They've been absolutely amazing. So they were gracious enough to give us this accounting and strategy expert to be able to talk to our clients about everything from, we're going to cover, you guys, everything from the new tax bill, accounting strategies. I know a lot of you guys are jumping into AI, and so we're going to jump into that. So with that, Devin, please introduce yourself.
Hi, thank you, Jennifer. I'm super excited to be here. And I did a little bit of looking into your podcast. Excellent work, by the way. And I might be, correct me if I'm wrong, I think I'm the first accountant to appear on it.
You are 100%.
Okay, well, I'm
probably should have
honored.
started with that.
Yeah, I'm honored and I'm super excited to do this. Like you said, here at Squire, we help you with just about everything. And we love your company and what you do. And so we're excited to share just a few thoughts on how accounting can benefit you and your clients. And we're going to keep it pretty high level because really these discussions, the numbers and the details should be had with whoever your CPA is. But I'm really hoping that today will give some direction for your clients, that it's they can go to their CPA and say, "Hey, I heard about a few of these things. Would you tell me how it fits into my scenario?"
Yeah, I love that.
Yeah.
I would say as an entrepreneur, a lot of times they're really good at X, Y, and Z, whatever it is, and not so much at all things accounting. And it typically would they go through some kind of phase in entrepreneurship where they're kind of winging it, Jimmy rigging it. Maybe a spouse is taking care of the books, or they're not necessarily reconciling at the end of the year, or not forecasting or planning or really paying attention to kind of tax strategies. From your vantage point, why is it critical that it becomes, this is prioritized as one of the first things that they get down early instead of come back to a giant mess they have to untangle later?
Yeah, that's, you bring up a really great point. A lot of people see accounting, it's kind of like the toilet paper of services, where no one really wants to spend money on it, but you have to. But like you're saying, if we take a different approach, we put it at the forefront. For some people, tax can be up to 37% of their income. And so if we make some strategies to reduce that, you're getting back up to 20, 30% of your income back. And so it's a really big line item for a lot of companies. And so tax specifically, yes, super important to have those conversations early with your tax accountant. But outside of tax, and, I'll just give real quick, 3 things that you should look for in your accountant, whether it's your tax CPA. I use CPA and accountant interchangeably. They don't have to be the same. It can be a CPA, an EA, or any sort of accountant. But there are 3 things that you should look for, and they are peace of mind, clarity, and time. These are the 3 things that accountants should offer. And if you're not getting those 3 things from your CPA, it might be time to switch. And so let me just go into those real quick. Peace of mind, whether it's taxes or bookkeeping, but let's say taxes, you don't want to be stressed out on September 14th because you extended and you're not sure if your accountant is going to get it done in time. Or even worse, you don't even know how much you're going to owe, right? That could keep someone up at night, especially if they're left with a big tax bill. Clarity, sort of same scenario, but especially when it comes to bookkeeping, you serve a lot of HVAC clients, and let's say you're just starting up or you run a small shop, but you need to expand, and you don't know if you can afford that, or you don't know when the right time to do it is, or if you do it, how much you're going to be bringing home. This is the sort of clarity that an accountant can and should offer for you. And the last thing is time. If you've ever tried filing your own taxes, even the simple ones can take a long time. So your accountant should be giving you back more time so you can spend on the thing that is most important, which is your own business.
Yeah, I agree with that. I think um, in the early stages, it's like they're going to keep you from buying the RV because you had a good summer. Little things like that, but it's a net positive experience because if you can avoid the pain of doing it wrong by putting a small investment towards doing it right,
Yeah.
you're going to win tenfold, right? You're going to win so much more versus ignore this because it's uncomfortable. I don't, not everybody signs up for a business and says, now I need to understand a P&L and a balance sheet and what cash flow
Yeah.
is, budgeting and strategy and so forth. But if you're rolling into 2026 without having that clarity and without having a budget and without having a pro forma and some forecasting available, then I would say buckle down, like find a day, and it's time to rethink how you go to market because I know I've worked with Adelaide on your guys' team, and like our meetings are now, I have so much clarity and I know exactly what's going on. So I'm able to go, you guys, I'm not going to bother you this month. Like send me the summary because now we speak the same language. The data's in the same
Yeah.
format. But it took me sitting on 2-hour meetings once a month long enough to where I have a really good understanding of what's going on from a financial standpoint. Where are we going? We had a lot of strategic conversations about things we could do different, what to prepare for. And then you get to pull back from that and not have to spend as much time on it, but still have the same level of clarity. So it's been an awesome experience for us.
So it sounds like you have made the mindset change where your accountant is now an asset to your business rather than just an expense. What happened to you to help you make that change?
I learned more. So I had a actual full blown CFO in our business, which was, I'm going to say one of those kind of positions, like hiring for HR, hiring a CFO. Those were kind of the last major moves for me. And I actually turned back time and I decided to go with you guys instead of that model. I learned more from the first 6 months working with your team and than I did from having an in-house CFO for 2 years.
Yeah.
It wasn't because you guys have so many resources. Like if I had questions, I know we're going to talk about this, but I had questions about investing in AI development and what does that do from an R&D standpoint. I had tax planning. We own multiple properties. Like because you guys are such a strong organization with all these experts that they can bring in, it's not just about bookkeeping, right? It was much more comprehensive to where, you guys are part of our decision making on hiring, on changing margins, on pricing, on adding new service lines. So yeah, I see your entire team as a part of our organization. And I would have never known that we need to do cost, whatever they're called on our properties. What are they called? Cost
Cost
segment.
seg studies. Uh-huh. Cost
That's
segregation studies. Yep.
How would I know that? I would not know that. So,
Yeah.
the more that we visit and the more that we talk, this is one of those things you don't know what you don't know. I didn't know what a
Yeah.
cost is, no clue, or the benefit or why I should do that.
Uh-huh.
So, I think the more honest and more transparent and the more that we visited, the more I realized like I should have had you guys in our back corner years and years and years ago. The amount
Yeah.
of money I burned ignoring it and just pretending like I got it. I shouldn't have done that. But
Yeah.
hindsight,
I love and appreciate that perspective. And no matter who the CPA is for your clients, they should take that relationship, or they should seek for that relationship as well, where they have an advisor, not just someone who does their taxes, but someone who sits with them and has the ability and capacity to talk through problems with them or find solutions to things that that they didn't even know were problems.
yeah, that I'll say the biggest one this year was the tax structure. I don't know what you call it, advantage code process, whatever it is. We've invested a tremendous amount in AI development. We've brought on
Yeah.
engineers, we've brought on AI engineers, we've been building all this new technology. And if I wouldn't have had those conversations where they were just asking, so what's new in your business? Like, what are you guys doing? I wouldn't have brought up that we're hiring all of these people or have been over the last year where they're like, okay, hang on a minute. We need to know these things because there's actual benefits
Right.
for R&D for all of these. Now we're doing this entire, study to be able to figure out what are all our investments, what's the total, and we capitalize on that. So we have a lot of clients that are also starting to get into investing into building their own AI platforms and so forth. What advice would you give to them?
Yeah, so that's a great segue into talking about the R&D expense. And what that is, it's the research and development expense, which can also turn into a credit for your business. In simple terms, a credit on a tax return is a dollar for dollar reduction of your taxes.
Let's
And so,
go.
yeah, that's just right. We love our R&D credit. It's very popular, especially because of how effective it can be. And so, and I can't obviously speak to all of your client situations, but here's some high level things that they should look for and then go talk to their accountant about it. And so what it is you're looking for qualified research expenses. And for when people hear that at first, they think no way that applies to construction, right?
Mm-hmm.
Because like research, we're not doing research here. But what it is it's a 4-part process. And it's really just saying, are you doing things to improve your business in a innovative way? And so there's 4 steps to this. The first is that it has to be a permitted purpose. Just what we're saying. It's improving your business, and it has to be in some way, like you're improving your product or your process or your software. And it has to be in your business. It can't be for something that's adjacent to your business, like you own an HVAC company, but now you're doing it for your real estate or something like that. It's got to be for your business. The second thing is there has to be a little bit of doubt on whether or not this will work, right? You're not just buying something that has been used by other businesses. You are developing it inside, and this may work, this may not, but you are working to resolve that uncertainty. The third thing is there's a process of experimentation, which is, well, we are developing this new AI model, or we're using AI in this way, and we think it's going to come out this way. So let's try it and improve upon it, like you would in an experiment. And the third, or the last thing, it has to be technological in nature, but that includes engineering or physical sciences or computer science. And so this is where AI comes in. AI is new to just about everything. And I haven't checked, but I don't think there's an AI product for HVAC companies, which means you're using AI in new ways most of the time. And so you take these expenses, and the IRS does want you to track what expenses you are spending on it and kind of parse it out from everything else you're doing. So if you have an employee who does 50% of his time on this new AI development and 50% of the time running your back office or something like that, just keep track of that. But with that, you're able to file and claim the research and development credit.
Woohoo! This is big for
Yes,
us, for sure.
it is.
I would have had no clue. So I'm at least $1 million in, at least.
Oh wow, yeah.
Probably double. Between technology, software, resources, teams, everyone that's building our agentic networks, platforms, everything else. And had I not had these conversations and had such an amazing relationship, I would be taxed on all of it. I would never know that that's going to all fall under R&D. So,
and we're super grateful that we can provide that sort of relationship for you, Jennifer. And that's at Squire, that's what we try to do. Not, however, for your clients, not all of them will have that kind of experience with their CPAs. And so it's important that they are reaching out and saying, hey, this is what I'm doing. What are your thoughts about it? And if they don't trust their CPA, go and get a couple of other opinions.
Mm-hmm. Yeah, absolutely. And you guys, this is for all of our listeners. There's a lot of positions that we hire for that are straight expenses. There's a lot of positions we hire for that could be done by AI, an existing platform, something that already exists. And if you are looking for tax saving opportunities, quite frankly, like you have manual, duplicate, redundant processes in your business currently operated by human beings who are also expensive that you could be solving for by developing permanent AI enabled tools or agentic networks or agents that can take on those redundant work and you could be deducting for it. So just sit down with your team. If your team's not giving you this kind of input, I'd definitely recommend reaching out to the Squire team and having these conversations because this is just an inefficient use of money to keep burning through human resources, doing repetitive tasks when you could be investing in a different human resource to come and solve it permanently. And there's tax benefits to that.
Yeah, correct. And as soon as you do sit down with your team, start keeping track so you can claim that R&D credit later.
Oh, yeah. Yeah, don't do what I did and have this conversation like a year later. And now we're literally sitting here going through record by record by record, payroll records, software records, tech records, every subscription you could possibly imagine. It's a little bit of a beast, but worth it. Yeah,
Right.
start tracking early.
Right. Yeah, exactly.
Oh my goodness. Okay, so I know one of the conversations that really is on my radar and that I've been working with Adelaide and Megan about has been this BBB, the new big tax bill
Right.
that's now. What are the impacts on me personally as an owner operator? What are the impacts on our business? How does this change our game plan? What are your thoughts specifically for the home services industry? What are the big highlights?
Yeah.
I know this is enormous, but what would you
Yeah.
highlight?
This was one of the largest bills, tax wise, that Congress has put into place in a while. Fortunately, it was made a lot of things permanent rather than changing things, and so there was a lot of tax code that was set to sunset at the end of this year, and it kind of just extended its life. But there are some things that you should be aware of, and some good things for the trades, and some things that are a little unfortunate. And so we'll go through a couple of those. The first one does not directly affect HVAC, but it affects construction in general. Is that you may have heard of bonus depreciation, and that was made permanent. What bonus depreciation is when you place an eligible asset into service, you can deduct 100% of it that year. Now, an eligible equipment is not like a building, but it is things like machinery or tractor or large trucks that you use. And those can be completely expensed because, if you don't, you have to depreciate it over several years of its life, right? So depreciation is made permanent, which means for construction, generally that means people like to build. If they can receive that deduction 100% this year, then we're going to build. And the other benefit of that is, as you were talking about the cost segregation studies, what the cost segregation study does, to put it in, is you have a building, but you can have a qualified engineer come in and separate, well, this is the building piece. And then inside that, there are also appliances and carpet and furnishings. And all of those can be depreciated this year. They don't have to be depreciated over 39 years or 27 and a half years like a building normally is. And so with that cost segregation study, you can use the bonus depreciation and expense a large portion of that building in the immediate year and get huge tax deduction from it. So we like bonus depreciation, and it means that construction should be alive and healthy for the foreseeable future, which is great news for your clients.
That's a big deal.
The second thing, specifically for the owners, is the QBI deduction was made permanent. That's the qualified business income deduction. And that is just 20% of your qualified business income is deducted on your tax return. And so that is just something that we should all applaud, that was made permanent and not taken away, as it was set to sunset in 2025. One more thing that is, I think, should be a benefit for the business owners is the no tax on overtime. So this was put in and kind of pushed by President Trump. But what it is any overtime hours will not be taxed for federal income tax purposes. So states may vary whether they comply to federal law or not. And you still have to pay your payroll taxes.
Mm-hmm.
But any overtime is not subject to federal income tax. And so that's something that you can do. You can market to your employees, and maybe it saves you money that someone is willing to work more overtime rather than bringing someone else on, right?
Mm-hmm.
But just make sure that your employees are aware of that. If they work overtime, they don't have to pay federal tax on that. Now, you asked about the construction credits, and this is the part of the bill that is unfortunate for the construction industry. There are two construction credits: the home efficiency credit and the residential clean energy credit. The one that's more applicable to HVAC companies is the home efficiency credit. That's
Mm-hmm.
under section 25C, and that is set to sunset on December 31st, which means next year it won't be available for all the homeowners. Sorry, let me take a step back. This credit is available to homeowners who choose to put in more efficient, energy efficient. It can be air conditioners, furnaces, water heaters. But when they choose to put in this more energy efficient equipment, they can get a credit for it, up to $3,200. So this is over December 31st. And so this is not my area of expertise, it's yours. But it feels like, from a marketing perspective, you need to, post this everywhere. Am I wrong?
No, you're 100% right. So you guys, all of these, is this all under the Inflation Reduction Act? Where this
No, this
originated?
is part of the One Big Beautiful Bill.
Okay.
Yeah,
But where it originated from, how is it connected to the Inflation Reduction Act?
Yeah, so that would be where it originated. You're right.
Okay.
And then it's because of the size of the One Big Beautiful Bill Act, the one just signed into law.
Yep.
There are some things that they chose to cut out, and these are some of them.
So this is it. So solar companies, all our plumbing companies, all our HVAC companies, there's probably some electrical companies that are going to deal with this as well. So bottom line is all of the big rebates that were available to consumers, credits that they got for implementing an inverter, a high efficiency air conditioning system, tankless water heater systems, buying a Tesla. Like there's a whole bunch of things. Some are solar, I would assume, would be part of that as well. All the solar credits. So those credits, rebates that are available to consumers, they end at the end of this year. So right now, for every one of our trades companies that is selling something that would be considered as a high efficiency blank, whatever that is, and available for the rebates, guys, this is the time when this is a banner on the homepage of the website. This is social media content that's talking about the big, beautiful bill and the fact that these rebates are going away. And now's the time to upgrade from a low efficiency system to a high efficiency system, or a tankless water heater, or to install that solar you've been thinking about on your roof, whatever that is. For you guys, this is a clear deadline, end of year. That's it. Do not keep it quiet. Like, don't keep it quiet. This is a great opportunity to educate consumers, because I don't think a lot of them know. I mean, I'm hearing little tidbits, but I'm hearing it from like Tesla regarding the rebates for purchasing a Tesla. I'm glad I made it in my made it here.
Yeah. And if there's any of the products that you are curious about, you don't know whether it fits or not, it's really easy. You just go to energystar.gov. When this was signed into law, they created this website for it. You go and you check your product against what's there. And if it's there, it qualifies. And so whoever buys from you can qualify for that credit.
Sweet. Thank you, Krista. We have an amazing producer. Okay. Yeah, that's a big one. And that does flow into marketing. That's important. If you're not talking to your account manager about that, or your marketing company, whoever it is, jump in, have that conversation. Okay.
Sure.
What else in the bill do you think is relative? This would be solar companies, plumbing, electrical. I mean, we even have construction, new construction, landscaping, pool company. I mean, we've got a gamut of home services. Do you feel like anything else in that bill is really important for these guys?
Yeah, I think we've hit on the whole of it. I mean, like we talked about, the credit sunsets for anything such as central air conditioners, furnaces, water heaters. I mean, air source heat pumps and solar wind. Even if you have clients that do geothermal technologies, I'm not sure. That seems
Yeah,
pretty okay.
we do.
Yeah.
Yep.
So
What we do.
anyone in that bucket, it's time to get going. But overall, the OBBA, or the One Big Beautiful Bill Act, it just made a lot of things permanent on both the business side and the personal side that are beneficial to our clients. And I mean, there's a lot that we could go through, but I think we hit the most important ones.
Okay. Good. So as we roll into 2026, we're sitting in Q4, right? Is it September? Yeah. So rolling into Q4, September, as we head into 2026, if you were to prioritize what you think these guys need to put on their hit list. So most of our clients, most of this industry is going to have this short little window shoulder season, where they run around to different conferences and so forth. I would say that this is the time to buckle down and really get your strategic plan in place prior to the end of the year. I don't want to be talking to you have your 2026 budget in February. Like, what would you? So if we back up for most of your clients, especially the ones maybe that are a little bit more advanced, have been working with you a little bit longer. Like, what does a September, October look like for one of your clients that's been with you for many, many, many years? What are the things they should be focused on in Q4 before we turn the year?
Yeah, well, I think you hit it on the head that Q4 is the time to start looking forward, saying what do we have coming up, and we do this because the worst thing that you can do is talk to your tax accountant after something has happened. There's a misconception that in tax, you bring it to the accountant and he does something magical to get you a deduction. But really, all that happens with planning from beforehand, saying you're going to do this. Okay, let's find a way to do it that is in the most tax efficient way or the most tax advantageous way. So Q4 is for tax planning. And when we say tax planning, there's a great analogy that I like to use. And I'm assuming a lot of your clients like football. Just yeah.
So,
And so in 2017, the Bengals and the Ravens played, and the Bengals were up by a touchdown. And it was the fourth quarter with about, I think there was like 25 seconds left on the clock. And Bengals have to punt the ball. Now they don't want to punt the ball because that gives the Ravens a chance with like 30 seconds left. So instead, what they do, you watch them hike it, and then the offensive line just wrestles everyone on the defense. I mean, you see him like grabbing them, throwing to the ground. There's even a chokehold in there, and then flags are flying everywhere. And the punter just walks back. And then when time expires, he steps out in the back of the end zone. And the opposing ref was just furious, or the opposing head coach was furious because he's like, what, like all these penalties, don't we get another play? Well, the Bengals head coach knew that if the game ends on an offensive penalty, it's over. If it would have ended on a defensive penalty, there would have been another play, but it was an offensive penalty. He knew the rules and he knew how to take advantage of them for the benefit of his team. And that is what your tax accountant should do. He should know the rules well enough, these little nuances well enough that he can take advantage of them. Nothing illegal, but he takes advantage of how they are today for your benefit. And now after that happened, after that play, the NFL went back and changed it. If it ends on an offensive penalty, there's another play. But that wasn't the rule at the time. And so Q4, you're looking at what do we know today and how can we use that to the best of our advantage? Some very high level things that your client should be looking at. One is a strategy called bunching. So if you are, there's the standard deduction and itemized deductions on your personal tax return. If you are under the standard deduction, then you just take the standard. If you're over it, you take itemized. Well, if you're right below the standard, you have this opportunity to start pulling in some expenses from next year to get you over the standard. So then this year you get over the standard, and next year you're well below it because you pulled expenses, but you still get the standard. And so you kind of double dip in that way. We call that bunching, and it's most often used with charitable contributions. And so if you have some clients who like to make large charitable contributions every year, they could consider doubling up on 1 year to be well above the standard. And then the next year, they'll be well below it.
Nice.
But then they take advantage. Other things are taking advantage of their retirement accounts, tax-free retirement accounts to be specific. If any of your clients do not have 401ks set up on their personal business, that is a great one, because on the 401k, you can take up to $70,000 a year. And it is all locked up in a 401k, except the nice thing about a 401k is you can take up to 50% or 50,000, whichever is greater, as a loan from your 401k. And you pay back yourself. But then, so if you're worried about that cash, right? What happens if I need the cash in the future? You can pull out that loan.
Right. I just did that. I just bought another house in Seattle, and I pulled whatever it was from my 401k. And when you say pay back yourself, if I read it right, I took a loan from myself. There's interest, but it's automatically taking the payment and putting it back in the 401k. And if I read it right, the interest I'm paying on the loan is also going back into my own 401k?
Correct. So it is a loan to yourself is what it is. But the money does eventually have to go back into that 401k.
Oh, it's so easy. You become your own bank.
Right.
Smart.
So we really like the 401k for that reason. And the nice thing about it is it doesn't have to be done by December 31st. If you get to January 1st, you see your taxes due and you don't like it, you can make a contribution for the previous year into your 401k. And that way, sometimes we hold off on clients making contributions until we know what their tax liability will be. And then we reduce that using the 401k if needed.
Nice.
The other one that's really great for construction is the purchase of materials. If you're a small enough taxpayer, you can use what's called the cash basis instead of accrual. Cash is you deduct what you pay this year. Accrual is you deduct when you use it or when it matches the revenue that comes in. And so if I'm a construction company and I'm buying a bunch of equipment or a bunch of materials to build something, if I buy it this year, I can deduct it this year. So that being said, say I have a large project coming up and it's going to start in February. And I also know this year I'm going to have a lot bill. Well, how about I buy all those materials in December, reduce my income for the year, right? And reduce my tax liability, but I'm going to use them in February anyways, and I was going to buy them in January. So we're just bumping it up by a month. Yep. And that's a discussion that you should have with your qualified bookkeeper or accountant to say, obviously cash is king, but if I have the cash and I'm going to buy it anyways, let's buy in December to reduce my tax liability. And the final strategy that we look at in this fourth quarter is something called the pass-through entity tax, And what it is when the Tax Cuts and Job Act was signed into law during President Trump's first term, they reduced the amount of deduction that you get for paying state taxes to $10,000. Well, that created a problem because some people pay a lot more than $10,000 in state taxes. So the pass-through entity tax means on the business side, you prepay state taxes, you get the deduction that way, and then the state allows you to take a credit against what you prepaid. So say I'm going to owe $15,000 to the state of Utah, where I am now. I prepay that on my business in 2025. Got to get my years right. In 2025. And then when I file my taxes, I tell Utah on my personal return, hey, I paid it through my business. Please give me a credit for that. And so that's something we use a lot, because then instead of the $10,000 limit, you get the 15. Now with the new OBBA, that was increased to 40. But if you have any clients that are in that situation, it still could be a really great strategy.
Increased to 40K?
Yes, that's correct. From 10,000 to 40,000.
Mental note, write that down. You guys talk to your accountants about it if they don't know. Call these guys. Okay, that's a big deal. I feel like I'm going to bring this up on my finance meeting on my agenda. I don't remember having the conversation about, maybe because it just happens behind the scenes. So that's very, very helpful. Okay, sweet. What else? What about budgeting?
Yeah, well, budgeting is definitely something that should happen with your advisor or your bookkeeper, because I know for construction, budgeting is something that is a headache, especially when you work with so many subcontractors or so many suppliers or vendors. Some sort of schedule should be built out at the beginning of the year, as far out as you can, and a cash flow projection especially. And so these are things that can happen at the end of the year, but honestly, budgeting should happen on a quarterly basis at minimum, where you're looking at the next 3 months and saying what's happening here. Start with cash, what's got to come out, and make sure that you don't need anything like working capital from a bank.
Yeah, I agree with that. I would say one of the things that really helped me in our position, we're complicated. I mean, for me, I feel complicated. We're in 27 states, lots of employees, handful of contractors. And what I noticed was when I got it down to where I have my core team, which my core team being Squire, handling everything from a financial standpoint. Squire works directly with Eddie, which is our payroll company. Our payroll company works directly with our compliance team, our broker, our ramp account for expenses and all of those things, and our insurance and benefits programs and everything else. And then I have an internal financial person that coordinates with all of you guys. Like, that's the magic everything, whether it's for forecasting, planning, tax savings, payroll savings, compliance, benefits, HR. That is when I sleep at night and I get to go focus on things like building the business, growing the business, like building new AI stuff, right? All of these things. That is the magic that happens, because I think people get a little bit confused on CPA versus bookkeeper versus tax accountant versus financial plan. Like, it gets a little messy on what's what. So what all do you guys cover under your umbrella? And then what are your strategic partnerships? Because that's what Adelaide's really helped me with, was making sure we plug right into the strategic partners that you guys already have really good working relationships with. So if you were to separate them and say, these are our core services that we provide, and then these are the relationships that you guys can plug into, what's that look like?
Yeah, well, I think it all goes back to, and you summed it up in a really great way, which is that peace of mind, that clarity, and that time. These are the things that your accountant should be giving you. And so here at Squire, we pride ourselves on being the premier firm in Utah, and we're growing across the United States rapidly. And the way we've been able to do this is we take smaller companies or larger companies, but whatever it is, we grow with you. And so a lot of our clients will come in starting as a tax client. And then as they grow, all of a sudden they need a bookkeeper. Well, we do that too. And then they need a financial advisor. We do that as well. And then eventually they need a review or an audit for a bond or something like that. We can do that as well. And so our core services, we break them into audit, advisory, and tax. But what that includes is whatever you need. If it's bookkeeping, if it's payroll, if it's state filing, we've even helped a client figure out the best way to buy a plane. And so anything that you need is what Squire's there for. Now, sometimes we don't have the expert in-house, like you're saying. We're trying our best to grow in a way that we do, but sometimes it's just not possible. And so we have partners across the board. I mean, we work with, I think you may have mentioned this, but we work with companies like Ramp, and Bamboo. And then on the tax side, we work with third parties that do in-depth studies for your credits and tax incentives. So really it's, what do you need? Okay, let's go figure it out for you. So it's taken from your hands, and we can offer you that peace of mind, that clarity, and your time back.
Yeah. I know we need to wrap up. We're getting the morning over here, but another really big lesson I learned was tax. During the COVID era, all the tax changes that had taken place, sales tax things. That was a huge lesson. And I don't know what happened, but one auditor in Texas got it. I swear they went to lunch with 20 other states. Next thing you know, we got letters from everything you could imagine. They network. And so we had got set up with Avalara. And even that wound up being a really enormous expense. Plugging in Avalara, getting all these tax things. And I thought that was the best route, but Squire literally unraveled everything we were being charged for, even with Avalara, which I know you guys are partners with, and I'm not bashing them. I'm just saying that after you guys really looked into everything, we had this thousands and thousands of dollars that was every month just hitting our database to see if it needed to charge tax, knowing every month it doesn't need to charge sales tax for those codes. And we wound up one decision that Squire brought to the table was your actual sales tax things is only this much out of this huge pie. And Squire wound up taking that in-house and saying, we'll make sure that the sales tax is all managed across all the different states appropriately. And the entire amount of the bill that I had with Avalara was more than getting your entire team on board for tax, fractional CFO, strategy, and accounting and bookkeeping. One single lesson covered all the costs plus some. So just citing all these entrepreneurs. We have lots of learning, lots of lessons that we've gone through.
I think one of the key principles that you mentioned, though, is find the people that make your job easier. Yeah, don't try and hard nose it and do it all yourself.
No. Oh, please don't do that. Because if you need a list of lessons on someone that hard nosed it and tried to do it themselves, I made most of those mistakes. Most of them. Well, I know we could cover a lot more, but it's been really, really, really nice to have you join us here today. And I hope everybody got a ton of information out of this. It's complicated. It's a lot easier when you have someone that is paying attention. This is kind of like SEO, right? You don't go try and do SEO on your own. You don't try and manage all the algorithm changes, the updates, technology changes, shifts, and everything else. You just have a really good team and they're experts at that. Same thing on the accounting side, right? Find people who's at your table.
Right.
That way we can just be good entrepreneurs with our little ADD selves and be good at whatever got us into it.
Right. Well, thank you for having me on, Jennifer, and thank you to your team.
Yes, absolutely. How do they reach out to you guys? Let's get website, contact
Right.
info, all that
So
out.
you can find us at squire.com. If you're in the construction industry, it's squire.com/industry/construction. And if you're wanting to see, if you want to find anyone specific on the Squire team, you can always find them on LinkedIn, or they're on the Squire website as well.
Yeah, I love that. Fantastic. Krista, you're amazing. Devin, thank you so much. We appreciate your time. You guys, if you need help, have questions, of course, he's mentioned a few times, go talk to your team, whoever's at your table right now. If you don't have someone at your table, reach out to Squire. I sat down and had like a 2-hour long conversation when we first got started. Find time, book it, ask those questions, and let's make it an amazing 2026. There's lots of change. It's a good time to get organized.
Thanks, Jennifer.
All right. Thank you, Devin. Thanks, everybody. Peace out. You guys share, like, subscribe, ask questions. If there's anything you want to see on the show we haven't covered before, make sure you tell us so we can bring them on. We're here to solve problems, create new opportunities, and help you guys grow. Thanks again.